Are you playing cards with a bunch of credit cards? Is that what you're trying to do?
Yeah, actually, I'm just counting my credit cards. It looks like
Out
I have 52 credit cards with me.
my word. How long
Yeah.
is saving them?
It's actually really good. I made my scores like 800 plus. My credit scores are 800 plus because I know that way to get that.
Right,
Because
right.
there is a trick to it. Use the
What is that?
credit. Other people use the other people money to make money. You don't use your own money. What is that called? It's credit,
Oh
right?
boy, that's so interesting. Let's talk about that today.
Yeah, exactly. Yeah, that's today's topic. So we call it cash. You guys probably know cash is king, and we call it credit is queen. So because we are going to tell you why credit is queen today.
Right.
Because
Excellent.
if you use your credit wisely, you could actually get more cash, free cash. But you have to do it in a certain way. That is what we are going to tell you. Like how can you get that thing, right? So the first one, first one, let's talk about how do you get more credit. How do you get more credit? So the cash automatically comes in after that. So when you do, when we talk about credit cards and credit, there's so many ways, right? Not only credit cards. There's auto loan, there's a home loan, there's a loan for everything. Everything is called credit, right? So don't just think about credit cards and then just have a negative impression about it. But everything involves that there is one score. It's called credit score, right? FICO score. That's what everybody look at it. So the FICO score tells your financial health of your whole thing, right? Unless you are billionaires or millionaires, some lot of cash laying around, you would need a credit to become rich. So if you look at everybody who become rich, they actually use their credit to build up their cash, cash flow or the cash. So the credit score is the critical thing. It's like a health score for you. That is what tells you, how much you are financially healthy, right? If your score is close to 800 above, right, you are really good, excellent. Like you should have at least 700 plus score to be better, right? So just make sure that find a ways to get your credit score higher. You're gonna get better offers in the future. And the next thing is there are more good credits and bad credits. If you look at it within the credit itself, good credit, bad credit. Like I said before, credit cards are actually a little bit in the bad side, bad credit. Like if you are not paying it back, actually credit card is good to use it because that's going to get you more loan options, more score will be higher. The more you use and more you pay it off, you're going to increase your scores, right? So when you increase your score, you're going to get more offer from different places because you are financially healthy. That's why. So the good credit is basically like something that assets, like land. You're buying a land, you're buying a house, you're getting a loan out of that. That's going to increase, it appreciates it, right? When it appreciates, it's actually creating a cash flow for you. But if you buy a car, it depreciates, right?
Right.
Say $50,000 car, as soon as it comes out of it, the showroom, it's only 40,000, 45, 42,000, something like that. So right away it depreciates it. So those are like a bad credit. Like if you wanted to, you can still buy your necessity like car, one or two cars that your family needs, but like don't spend on the bad credit lot. Just use the good credit, something like land or the houses payment, or like even the credit card. If you have a 0% APR, no interest, you can get that. That's a good credit. But if it's like 16%, 17% interest, you're paying like hundreds of dollars every month. That's a bad credit. So just choose the good credit route for your to get more cash. And the third point is the get like think about all the credits that you have, credit cards you have. I have 52 credit cards. My utilization is like 1%, right? I'm just using 1% out of, I don't know, 150, $200,000 total credit limit for all of them, right? So think about, I'm just using that much because I'm paying it back. Actually, I'm paying it back within the same month. So there is a rule, like 30% usage. So anything, if you use about 30%, you need to reduce your usage, or use a different card, right? That way your score will actually goes up. If you use less than 30%, you will have a good score. The next point is, like, if you have an issue with your credit, fix it. Like, you can dispute it. You can go to creditkarma.com or some other, all the credit bureaus. You can go Equifax, Experian, TransUnion. You can go there and dispute that. If it's something wrong in there that's causing your score go down, right? Just dispute that and fix that credit. That way, it takes like a month or two. Your score is going to go up. That it'll fix your credit. And there are some agencies that you can hire to fix your credit. If your score is like 500, it's totally bad. You need to use those agencies to fix your credit. The next point is the pay on time. Like I said, if you're using credit cards, pay on time. Don't delay anything. Sometime even if you delay and they report it to the credit bureaus, you can actually call them up, call the credit card company, ask them to remove it because this is your first time, you haven't done this before. Like those kind of goodwill credit they will give you. They will remove those things. And also, like, if you paid, if there is a late fee, right? And then in that case, you can call them up and then tell them that this is your first time, and all those things. So pay on time, automate the process, automate everything. That's actually going to help you to increase your score.
That's a good point when you get automate payments, because sometimes what happens is if you're trying to manually do it, then you tend to forget it. So, and also I want to add a point about paying on time. Is that true that if you late on payments and if you goes to a credit collection agency, it's going to stay on your record for
7 years.
7 years or something?
Yeah, exactly. The 7 years you're going to have like 20, 30, 40 score points lower, depending upon the collection, how big it is.
Right.
So you don't want that, right? You try to just settle down. Like if say you are going to buy a house within the next year, right? You're going to actually get maybe a half percentage higher interest rate. Think about like half percentage higher interest rate. Eventually you're going to pay like $20,000 instead of paying like $200 to fix that, right? $200 to pay it off. You're going to pay $20,000 for that mistake, right? So that's exactly that point. And the next point is the if you like I have account with every bank in the US, right? Almost every bigger banks. So because once I open it, they know that I have been having account with them for, let's say I opened it 5 years ago. I just use it for some time and then I keep it with me. I don't cancel them, right? So I have 5 years. That means I have 5-year relationship with that finance company, right? They trusted. I actually paid back everything and all those things. They have those history. So it's actually really good for your background, like your credit report. When people look at it, you have 52 different banks, and everything is paid off. That means your score is really going to skyrocket, right?
Yeah.
That is the create relationship with as many as you want, and take advantage of their bonus. Sometimes they have $100, $200 bonus. Just apply every year, maybe 4 or 5 credit cards, and then you can get those bonuses and use those, right? And the next point is, if you don't let's say you don't have any score at all. You never had any credit score. You never had a credit card. You never asked for a loan. You're going to have a lot of trouble, getting a house financed, because you're not going to have $300,000 cash to pay the house payment, right? That's why you need to get a loan. You don't want to do that after 10 years. Like when you're in 30, you don't want to think about that. So that's why, if you don't have a score, like when you're in late teenage, right, you don't have a credit history built up, started, you should do a secure credit card, something called secure credit card. Look at it. You will know it. Like you put $200, $300 your cash in there in the bank. You open it like a checking account, but you pay it off, and it just works like that. And then after 6 months, you will get a real credit card, not a secured credit card. Just check it out. That's the one way to improve your credit score. And then also another trick that nobody really realizes, like say you are a parent, you are in 40s or 50s, you have 20 years of credit history, and then you have let's say you have a kid, right? You have two kids, and one is 13, another is 15. They don't have a credit history right now. But think about like you might be doing a lot of other things, but you may not be thinking this. You just, when they become 13, you can actually add them into an authorized user in your credit card. So you have 20 years of credit history. It directly goes to them also. Like they will get that as 20 years history. Their score will be like very close to yours to start with, right? And then if they are really responsible and then do all this good, like pay it off, buy it, and then pay it off right away, that keep going in that cycle, their score will go up and they will have a good rate loan eventually. So when they get the loan, more and more loan, they're going to get more money through that. That is the next point actually. So apply for more loan. That way you qualify for more loan. It's kind of more counterintuitive if you think about it. You apply for more loan, and
Right.
and then you are paying it off, right? You're being responsible. Not right. You're not applying right away to other loans. Just I'm talking about like every 2-3 years you're applying
Right.
another loan, right? Because you have been paying that, you have consistent history with that financial institution. That way they see all these things and your score is higher, everything is good. They will lend you more loan for a different house. Think about it, you are buying a house or you're buying extra getting rental income, all those things. So that's why like you keep going with that, and you're building up extra like all those loans, but it appreciates, like I said, right? It appreciates, keep appreciating. You buy $100,000 house in a loan, but it become $150,000 in the market, right? So you have $50,000 free cash with you because the bank is not going to take extra 50,000. You still have that. If you want to sell it, you can get that 50,000. So that's the last point. Basically, it's like when you try to apply more loan. Don't apply the credit cards. I apply this 52 credit cards because I wanted to create a relationship with them. I want to build my history right away. So it skyrocketed from, I had like when I started it was around 700, right? Normal score, because I was paying first year or second year. And then after 10 years, I have 52 cards and with so many banks relationship. And I'm 800 plus now, right? The scores are 800 plus. That's what makes your score higher, and then you qualify for more loan. So when you qualify for more loan, take advantage of applying housing loan, right? Get a rental housing and rent it out. You will get a lower rate, and then you can get, like I said, if you buy it for $200,000, and then it will be $250,000. Also, you're getting cash flow from there. So you are using other people's money, the bank's money, to get extra money for you. But you still have to put a little bit of it. You can do house hacking. There are so many other techniques that we can talk about in the future videos. But basically, use the credit wisely. That means build up your credit history all the way up, close to 800 plus is better. And then once you build up using all these techniques that we talked about just now, and then you could just take advantage of offers coming to you from banks that they want to lend you money for the lower rate to buy a house, appreciating assets, right? The income producing assets, like all those things you can buy more in like 2-3 years. Every 2-3 years you can just layer them up, right? And then in 10 years you will have a good portfolio of income producing assets just by using other people's money, right? And then you can sell one
Right.
and then get the extra cash and use it for something else. There's so many things. That's why we call the credit is queen in this case, right? You're going to use the credit to get cash from other people.
Nice one.
Yeah, yeah. Hopefully you guys liked it. And see you guys in the next video.